Hello, everyone. I'm super happy to see you during our session today to talk about one of the hottest topics on the blockchain market currently, and this is the tokenization of real-world assets. I am hearing these words everywhere, basically, at blockchain conferences, and I'm personally, I am not a tokenization expert, and we have invited someone who is from also one of the up-and-coming blockchain networks, Coreum. So we have Helwan Mandé tonight, who is going to talk about the tokenization of real-world assets. What is this? What are real-world assets, of course? What is the tokenization of real-world assets? And he's going to basically walk us through the whole process of tokenization, which is really amazing. But first, before we kick off this session, I would like to say a few words about who we are at EkoLance. We're organizing this session tonight. So I would like to, I just spoke briefly about the agenda. So who are we at EkoLance? EkoLance is a talent platform for blockchain professionals. We upskill and onboard professionals to work in the blockchain industry. And we have trained more than 9,000 professionals already. We have organized more than 30 hackathons, and we have developed more than 350 applications, decentralized applications during these hackathons and projects that we have done for blockchain companies. This picture here is actually from a hackathon that we did together with Coreum, and you can see maybe myself here in the white, and here is our guest speaker right behind me in the black t-shirt. So yeah, we have a picture together. And again, briefly about what we do. The way we upskill is with sessions like this. Our community always has access to up-to-date topics where they can learn about the newest blockchain trends and also how certain technologies are working. We do technical professional trainings, non-technical professional trainings, as well as soft skill trainings. We organize online hackathons and bounty challenges where developers and also non-developers can develop projects and win prizes, as well as get access to funding. And we also provide job opportunities to our talent pool. And we're working with some of the biggest blockchain protocols right now, like Solana, Gnosis Chain, Celo, and so on. So without further ado, I would like to give the word now to our speaker for tonight to introduce himself and to kick off telling us more about the tokenization of real-world assets.
Thank you, Maria. Yes, hello everyone. So my name is Helwan Mandé and I lead network expansion for Coreum. So we will see that, today we're going to speak about tokenization. We're going to see what is tokenization. That is not a new, that is pretty old, right? The concept itself, but we're going to see today how can we apply this concept to the blockchain as a medium. So super quickly, what is Coreum? So Coreum is a layer 1 blockchain, enterprise-grade blockchain that has been built to match the need of large institutions. So for example, tokenization. So yeah, I think we can start. So today is pretty much a workshop. So if you have any question, feel free to put them in the chat, and maybe I can stop very briefly to answer them. It works?
We're still not seeing your screen.
Yeah, so the way we're going to conduct the presentation, I'm going to share my screen and we're going to go over 3 main topics. So first of all, we're going to do a brief introduction. So the evolution and the impact of tokenization, some example to illustrate what is tokenization. Then we're going to pass on the key elements and consideration that you should keep in mind when you're either building a tokenization platform or dealing with a tokenization platform. And we're going to end the presentation by actually architecturing a real tokenization solution on the Coreum blockchain. All right, so let me share my screen. All right, can anyone see my screen?
Yes.
Okay, perfect. Awesome. So introduction to real-world asset. on the blockchain specifically. So first of all, what is tokenization? So for me, there is two definitions, right? There is the global definition, the one that has been here for a long time, and the new definition, let's say, that is more related to the blockchain world. So, but let's start with the old definition. So, tokenization is the process of converting right to an asset into a token on a ledger. So let's do some like a brief history, right? So we can pretty much get a better grasp of this this definition. If you look on the left, we have a shell, pretty much. So I'm from the Caribbean, and back in the days, people used to transact with the commodity itself. So a shell, an actual shell. So let's say I want to buy two fish. I come with my two shells, and I exchange those two shells for my two fishes. If you fast track a little bit in time, then there is the appearance of a market or a marketplace, let's say. The use case. Let's say I don't have the two shell, but I still need to eat, right? What is going to happen is that the merchant is going to open his book and say, Helwan owe me two shell, and I'm going to give him the fish, pretty much. So what happened right here? If we go back to the definition, so the process of converting right to an asset into a token on a ledger. So we have the asset, so the commodity, which is the shell, and we have the ledger, which is the little book where the merchant just puts my debt, pretty much. But we can see that we're missing a part, right, which is the token itself. So at this stage, there is no token. If we fast track a little bit, we go to the next step, so the US bill, right? And when you think about it, what is a US bill, right? It's a tokenized form of a specific ledger, of a serialized ledger, to be even more specific, that live on the Federal Reserve, pretty much. If you look at the bill more closely, you will see that there is a serial number on it. It says FF95594, etc. So it means that this bill have a reference into a ledger, right? So once again, let's go back to the definition super quickly. So converting right to an asset into a token on a ledger. So we have the ledger, the Federal Reserve, we have the token, the bill, but what is the actual asset? So back in the days, the US dollar used to be coupled with gold, right? So the asset was gold. It's not the case anymore, but I believe that with that example, we have a very good grasp of what is tokenization with the US dollar when it was backed by gold, right? So the assets, gold, the token, the bill, and the ledger, the Federal Reserve. And the way that we do the mapping between the bill and so the token, which is the bill, and the ledger is through this serial number that we see on the left of the bill. So pretty simple, that is the actual definition of tokenization. If we fast track once again a little bit, we have the stock exchange, pretty much. So you have those big public company that want to raise fund by selling pretty much share of their company. So when you buy a stock, you're buying a token, which is the stock itself, and the asset is the share of the company, right? What is the actual ledger? It's the stock exchange. So either NASDAQ or the New York Stock Exchange, whatever, right? But you have to have a centralized authority that keep track of who on what, pretty much. And when you want to transact on that asset, you do it through the ledger of the centralized authority, and you have a classic order book where sell order need to match a buy order to go through, and it's the same way. It's the same thing the other way around, right? If you wanna sell, if you wanna buy, you need to find someone that is willing to sell, and that is pretty much the job of market makers, right? To keep the market liquid and to make sure that there is always a counterparty to those orders. I'm just checking. I see that there is some question, just making sure that everyone can hear me well, that I'm not speaking. Okay, it seems good. Awesome. So that is pretty much the last part of it. And if you look completely on the right, you have the Coreum token. So it's the token that is native to the Coreum blockchain, but it's just an illustration to say that right now you're able to do tokenization of assets on blockchain. So it's pretty much the same process that for stock, but instead of having a centralized exchange that is the ledger, you have the blockchain as the ledger, as the medium that is pretty much referencing who on what. So that was pretty much the definition of tokenization, couple of example, and I think we can end up this part with the actual blockchain definition of tokenization, which is the process of converting right to an asset into a digital token on a blockchain. So it's pretty much the same as the old definition, but on that one we have digital token, right? That replace the token itself. So it's not anymore like something that is tangible, like a bill. It's a digital token on the blockchain, and yeah, the ledger is the blockchain itself. So now, what are the benefits of doing that either than doing it on a stock exchange, for example? There is many benefits that we heard. So one of them is all-time trading. So you can trade at all time without the need of the stock exchange to be open, because we go from a centralized authority that need to be open and to allow trades to something that is decentralized, so the blockchain. So it means that you can conduct trades whenever you want. The second thing is related to liquidity, right? So you cannot, for example, there is some country where you cannot access SP 500 shares, right? With tokenization and the blockchain, because it's decentralized, anyone can access the underlying asset pretty much. And the last part that I think is one of the more interesting is decentralized finance. So the reason I talked about order book in the beginning and the process of matching an order with a buying order with a selling order and market makers is because on the blockchain you have this set of products that is part of the decentralized finance family that enable pretty much another way of trading on those assets. One of them is something that is known as automated market makers. So pretty much you have, instead of having an order book, you have this market maker that is on-chain and that is not relying on any third party. So you have this pool that hold asset A and asset B, and through an algorithm and some mathematics, every time that there is a transaction on an asset, the pool will automatically balance itself, right? So it's pretty much complex and simple at the same time, but just to say that tokenization enable a new way of transacting on the tokenized assets. All right. Do we have any question so far?
So actually, yeah, we have a lot of questions and some discussion already going on. Maybe we can take some questions here. Let me read something. Does Coreum use oracles? Maybe one of the questions I see.
That's a good question. So right now we do not use any oracle. So for those who don't know, an oracle is the way for a blockchain to fetch data that are not on the actual blockchain. So let's say you want to fetch the price of an asset that is coming from a centralized exchange, for example, you will need an oracle to be able to fetch that information. If you want to fetch the wither, you will need to have an oracle that is going to provide the data to the chain. And the reason why we have an oracle is because the blockchain itself is isolated. It do not talk to the internet in a sense. And the oracle is pretty much a set of decentralized computers that will reach consensus in order to bring information on the blockchain to make sure that this information is not tempered or malicious. So right now we don't have any oracle on Coreum. It's coming, but the good thing, because of what I was explaining of AMM and DeFi, to calculate the price of an asset on chain, you actually do not need to fetch the price from the outside world. You just need to rely on those algorithms that will balance the pool through arbitrage, pretty much. And this is how you can have, for example, if you take not a stable coin, but like any type of asset, the price is almost exactly the same that on the AMM, on a blockchain, and on a stock exchange, for example.
All right, so there are some Coreum specific questions here. I don't know if we should take them in the end. So like, for example, what does Coreum offer to make companies want to tokenize on their software and use their solutions versus Ether or Solana? Maybe we can take these questions in the end of the presentation that are like Coreum specific. And one other question William is asking, are there any companies looking to tokenize commodities, ETFs, real estate, etc.? If so, what is the time frame we could expect to see that? And there are already some people posting or answering to this question with their knowledge about this topic, but maybe Helvan, you
Oh,
can say
nice.
a couple of things
This
about
is when
it.
like it's a good workshop when people start interacting with each other and answering their their own question. But pretty much on the first question about Coreum, so I'll go through the presentation and you will see there is some part of it that will be answered. But on the other part of the question that was related, I think, to what institution are looking to tokenize on Coreum, right? So there is many, but right now what we're really pushing is we have made the chain compatible with ISO 222, which is a financial standard for pretty much a standard for electronic payment transaction. And when you think about it, it's right in the subject of this workshop. It's tokenizing a message to enable two institutions to communicate between each other. So it's in progress. We've been working with a couple of institutions of that, and they're doing proof of concept on the chain right now. All right, so key elements and consideration of a tokenization solution. So what should you have in mind when you either building a tokenization solution or interacting with a solution that is already existing, or you contracting someone to build one for you? So there is pretty much two risk factors when it comes to tokenization that happen on blockchain. The first one is related to the security of the protocol and the application itself. Security vulnerability, which is the more obvious, right? When you pretty much interact with a blockchain, one of the key selling point of the blockchain is immutability, right? So everything that you deploy on chain, the logic that we call smart contracts is transparent. So it means that anyone can see what is on chain and verify it. And at the same time, it's immutable. So you cannot change the code afterward. It has been deployed. So it means that the attack, the surface of the attack surface, sorry, is like pretty much very big. You cannot do like security by obfuscation, like in the Web2 world, and pretty much hide your code base. You need to make sure that the code is properly audited and that you think of all of the different edge cases. Scalability and performance, you need to make sure that the system and that the blockchain you are relying on is able to support a high throughput of transaction. And after that, there is the operational risk and the user experience to make sure that the product is indeed usable. From a compliance standpoint, what is interesting is that most of the time when you tokenize asset, you're coming with a new financial product, right? And we've seen in the past that all of those regulatory arm of different country, they tend to categorize those new financial product as security. So it means that you fall under a certain jurisdiction, and in order to be able to offer your service to the end user, you need to make sure that you comply to a set of rules, which is pretty much the regulation itself. So this means that you need to either acquire a license that will make sure that will tell the regulator that you're compliant to whatever needs to be done, and you also need to enforce that regulation on chain. And that brings me to my next point. How do you make sure that with this regulatory landscape that is evolving very fast and pretty much the real answer is that no one really know what's happening in terms of regulation, right? No one really know what is going to be tomorrow regulation, and no one really know if their product fall under a certain set of rules. This is why we see like each day, like the ECC going after this vendor or this other vendor, because they are figuring it out on the day basis. Like, what is security? What is this product fall under a certain set of rules? So pretty much you need to make sure that the solution that you're building, or like the foundation layer of on where you're building is modular enough for you to implement this set of rule in your product. All right. So the way we choose to do it at Coreum, so we're a layer 1 blockchain. We are public, open source, and fully decentralized. And at the same time, we are compliant and we enable KYC. So know your customer, and also it's not here, but KYT, know your transaction. And you can see that there is some overlap between those two. Usually, like projects that are fully decentralized are not compliant to the different regulation, or they do not offer any type of way for the builders to make sure that the solution they're building on top of the blockchain is going to be compliant. At Coreum, we choose to pretty much take the best of both worlds and see how can we make sure that even though we are running a decentralized network, how can we make sure that the actual products can be compliant with the regulation. All right. That brings me to my next point. So when you, for example, let's say you want to, one of the thing that is important and that is coming a lot of time when we talk about regulation is how do you make sure that you're able to track who have access to the tokenized asset, pretty much. So how do you do the mapping between the off-chain identity of the user, let's say the accredited investor, and his on-chain identity, which is his wallet address, right? The way we choose to pretty much enable this at Coreum is with smart tokens. So what we choose to do is take the token execution logic out of the smart contract and put it at the protocol level. Seems a little complicated, but I'll explain right now why we chose that path. For two main reasons, right? The first one is deterministic behavior and deterministic gas fee. So the first one is pretty much saying that those smart tokens, they come with a set of features, right? So burning, freezing, whitelisting, disable sending, and an access control list. So you can be confident when you interact with those smart tokens that are representing the security, that they will always behave this in a coherent and known way. The other part, the deterministic gas fee, is pretty much saying every time that you interact with this token, you can expect the same output in terms of pricing. So what is the price related to to interacting with this token, right? Let's say I send the token to Maria. I'm gonna have to pay a small gas fee, right? Which is the reward to the blockchain network for them to process a transaction. She send it back to me, it's going to be the same exact output, which is not the case when a token is inside a smart contract. Why? Because the smart contract is a complete Turing machine, and it means that its output is not deterministic. So you can, depending of the load of the network, you can have transaction A that's going to cost, I don't know, 1 cent, and transaction B that is going to cost 10 cents. And that is not viable, right, for a business when they're looking to scale their solution. So that was about smart token. It will make more sense later on. So that is what I explained, like the different modules. So the fee model, the assets, fungible, non-fungible, and the deterministic gas fee. I talked about this already, but the different smart features. So issuing, which is minting, commission rate, royalties, burning, whitelisting, freezing. All right. I think we can take a quick pause on that one. I'm just gonna drink some water, and I'll be back in 2 seconds.
All right, so I see a lot of questions in the chat. I will ask Helwan in a second if we should take some questions now or if we should wait until the end, because I think most of the questions are actually regarding how the actual solution would look like on Coreum. And because he's gonna also show like architecturing a solution, maybe he can, while explaining the architecturing of the solution, maybe he can also answer the questions that are asked in the chat. So
All right, I'm back. Yeah, I
okay.
mean, it's really up to you. Like maybe actually let me look at the questions.
Should I
Okay.
read them?
Yeah, if you want, yeah, let's do it.
All right, so let's start. Okay, again, there are some very related to Coreum questions. Maybe we can leave them for the end. Let me read something that it might be relevant to answer now. When the asset tokenization gateway goes live in Q3, will we be able to tokenize anything right away, or will it initially be for stocks, etc.?
That's a good question. So what is I think it's RTQ that has the question. What is RTQ referencing is Sologenic, which is a tokenization platform, is going to build their tokenization gateway on Coreum. And pretty much from what I know, it's only going to be stocks for now. So you're going to have the stocks that are going to be tokenized on Coreum. So, and what is interesting is that those stocks, you're gonna be able like to do fractionalize their ownership pretty much. So it means that I can have half of a share of a stock, you can have the other half, and before the clearing is happening, we will put both of our share into a pool, and when we reach one, which is the total the total amount of the share, then there is a clearing process that is happening, right, to what we call an omnibus account. And then I believe that a broker will clear the transaction and sell the stock, do whatever what was the initial command on the stock. But to answer the question, I think it will be initially stocks.
Okay, another question is, how do you manage to bring assets on chain and other standards you follow so your tokenized assets can be traded on secondary markets or other marketplaces?
That is a very good question. So when you pretty much bring an asset on chain, you're right. Like you want to be able, you want first to make sure that only accredited investor can access the primary sale, let's say, but afterwards you also want to make sure that if there is a secondary market or secondary sale that is enabled on that asset, that this token follow a certain standard, right? In order to be either interoperable with different blockchain or accepted into different marketplace. In the case of smart token, what is very interesting is that those assets are native to the Coreum blockchain and native to the whole Cosmos ecosystem that we call, which is the internet of blockchain. So those assets, because they follow a set of rules and they're pretty much standardized, even though we did enhance them with some key features, some smart features, they still follow a set of rules that enable them to be traded on the secondary market. And that is a very good question, and actually I'm going to tackle it more in the when we're going to architecture the system.
Okay, so I would suggest you jump in the architecture and then answer the rest of the questions maybe afterwards.
All right, let's do it. So I think, yeah, we talk about pretty much the risk factor, the power of asset-based blockchain. Actually, I didn't tackle that enough, I think. So maybe just really quickly, what is an asset-based blockchain? Like Coreum is a blockchain that put assets as first-class citizen. And that is pretty much simple as that. So instead of having the tokens, instead of having to write extra logic on the chain to interact with tokens, either fungible or non-fungible, those tokens are native to the blockchain, right? And for the reason that I explained earlier, right? Deterministic behavior that you can see on the screen right now, and deterministic gas fees. All right, so let's jump into the actual architecting of the solution. I think that's gonna be that is what people are waiting for. So first of all, let's talk about the actors, right? So there is usually 4 actors that are involved into the tokenization process. So there is the investor, of course, which is the end user that is gonna pretty much buy the tokenized security. And this investor, you can put it in different class, right? Primary investor, secondary investor, accredited investor, whatever. But let's put it as the investor. You have the asset issuer, right? Or the broker. And pretty much when we're gonna see like in our use case, but when the asset that is tokenized is issued by let's say one entity, usually is going to be that asset issuer that deliver the stock to the end user and that tokenize it as well. But in the case of stocks, for example, it's different companies, right? Those stocks, let's say you have like 10,000 stocks, those stocks are owned by different companies. So it's really hard to have one asset issuer. So usually what you do is that you deal with a broker that is gonna clear the transaction on your behalf and talk to those 10,000 institutions, which is way more viable. You have the KYC provider, so know your customer. So how do you make sure that an individual is actually accredited or can pretty much is entitled to own a certain stock. If you look, for example, in the US, like to protect investors, they pretty much only allow a certain type of citizen to trade on a certain class of assets. I believe you have to either have a net worth that is higher than a certain amount and be familiar with the security market to be able to buy a certain class of securities. So the KYC provider is the one that is going to be able to say, okay, this guy right here is an accredited investor. And then you have the solution provider, right? Which is not Coreum, right? Coreum is the blockchain itself, is the foundation layer, but on top of that, you have pretty much a company that is going to build a tokenization platform on top of the blockchain. All right, so that was the actors. So the use case, very easy, one sentence. So tokenized security offering to raise funds for a real estate project. So there is this real estate project, let's say it's in Europe. They want to build a mall, let's say, and they want to fund the mall by offering share in the project. And they want to tokenize these shares to make it more consistent in the way that they are sending selling those security to the investor. All right. So the way I like to do it is because I have a software engineer background, is to start with an activity diagram, and after that jump into the actual solution, which is the component diagram. So the activity diagram, you're gonna see it's pretty much simple. Is just show the different actors that we just talked about and the different action that they're gonna take on the system. So let's take a look at it. All right. So you're gonna see it's way less fancy, but I believe it still deliver the message. All right, so you have the investor, right? So what the investor need to do in order to first start to interact with the platform, need to pass KYC, so know your customer. You need to provide the information to this guy right here, the KYC provider, for him to justify his status, right? He also want to buy the token, so buy the security. You want to buy share into the mall. You want to be able to resell the token on the secondary market. Usually, what happens is that there is a timeline, right, where the offering is only for accredited investor, and after that, the token is able to be traded in the secondary market. So you want to be able to resell the token. You want to be able to install a wallet, and maybe I stop like 30 seconds on this. So the reason you want to install the wallet is because the solution that we're providing is a self-custody solution. So it means that the solution provider do not own any of the private key of the investors. So why is that? Mostly because of regulation, right? Regulation, and also, so because of the two risks we talked about. So let's start with regulation. The more you pretty much information you have on the investor, the harder is going to be to either get a license or to comply to the different regulatory framework. So you want to let the investor owning his own private keys, right? The other reason is for the security risk in terms of technical security. If you put all of your eggs in the same basket, if something happens, then all the investors are going to lose their fund, right? And this is not what you want to do. You want to make sure that each investor is responsible of his own assets. So that is for the investor. The solution provider, so we will create the smart contract and it will deploy the smart contract. And probably also it will create the whole platform, right? So usually a platform is you need the smart contract, so you need the on-chain logic to be enabled, but you also need a user interface, right? For the user to interact with your solution. So he will probably need to build a user interface. The asset issuer, which is the one that is looking to pretty much share the sale of his real estate project. You want to be able to send the yield to the investor. So pretty much, if you take, for example, stocks, when you own share of a company, you entitled to receive the profit, like a part of the profit that is being made by the company, right? That is corresponding to how many share of the company you own, so how many stock that you own. It's the same for this project, like probably the mall is going to generate some yield at some time. So the asset issuer want to be able to redistribute this yield to the investor, right? You want to whitelist wallet. We'll give more information about that, but it's pretty much making sure that only accredited investor can buy the token. And you want to mint the token, right? So you want to tokenize the security. And the KYC provider that we see on the right, he wants to proceed to KYC. So he wants to pretty much give the information about the user identity and status to the asset issuer. All right. So that was the solution diagram. I believe it's pretty straightforward, but it's very important to understand like who are the different actors and what they can do and what they cannot do on the system, let's say. All right, let's jump into the actual solution, which is the component diagram. All right, I see that it's a little big, so I'll just zoom and then move to the different parts. All right, so what do we have here? We have different components, right? So a component diagram is pretty much explain what are the different parts of a software system, right? So the different components of a software system in terms of blocks. So on the left, we have Wealth Block, which is a KYC provider. And you can see that Wealth Block have a KYC verification module, right? On the right, you have the investor custom software. So it is composed of a notarization and logging module, a KYC module, and a notification module, and as well as a token management module. That is for the investor software. So the investor have his own software that allow him to pretty much take action on his tokens and to provide the information that is necessary for him to get his accredited investor status. We have the admin custom software. So same here. The admin need to be able to log in. You need to be able to manage the supply of the token. So to actually mint the token, you need to be able to distribute the yield and to mint the yield token. That is important. I'll talk about it later on. I'll just give a brief overview of the different components, and after that, we'll go more into the details. Then you have the Coreum blockchain itself, right? So it's pretty much an abstraction right here. It's more complex. There is different components, there are different nodes, there are different validators, but this block is representing the blockchain itself. Inside the blockchain, you can see that there is a smart contract. And on the smart contract, there is a DEX, which is a decentralized exchange or an automated market makers, AMM, that I was talking in the beginning of the presentation. And in this DEX, you have a pool, pretty much. So the pool is the actual, let's say, order book. So it's not an order book, but it's delivering the same, let's say, value in a sense. So you want to be able to exchange a token for another. And that's pretty much it in terms of the key components, right? We have the wallet as well, and we have the on-ramp mechanism. So I'm going to do a quick break on this, like little disclaimer. So we can see that this is a pretty complex solution, but at the same time, it's a pretty complete solution, right? So all of the different tokenization platforms that you see and people that are trying to either onboard you to a solution or people are trying to build solution, this is the process that they are going through, right? In terms of technical achievements. So those building blocks are, I would say, like not, you cannot get rid of them, right? You can rearrange them. Maybe like some people are gonna take the two blocks, merge them, but those key functionalities, they need to be somewhere, pretty much. All right. So let me see if there is some question related to this so far. Will we be able to get access to the information? Yes, I think Moria is gonna share the slide with everyone afterward. But I just want to stop on this here. So mint yield token, pretty much. Why is that? Because let's say you tokenize this security, right? Which is the investment of the your contribution into the mall, right? You want to reward the investor with something, right? And it cannot be the same token that is representing the investment. That is representing the tokenized stocks of the mall, share of the mall, sorry. If you do an analogy with the traditional stock market, let's say you buy Tesla, right? You buy a Tesla stock. The yield that you're getting from this Tesla stock is in US dollar, right? You're not getting more Tesla stock if Tesla is performing well, right? So you still have one, but you're getting returns in US dollar. And that is pretty much the same that is happening here. So we need to find a way to reward the user with a different token that is not the security itself. So that is pretty much it. So let's know that we did like the global overview. Let's pretty much start to understand how can this, what it will look like, right? If a user would like to buy the actual security as a primary investor and then resell that stock on that share, sorry, on the secondary market. All right, so I'm the investor. I log in into my platform, which is this custom software right here. I log in, right? So email, password, super classic. I submit my information to the KYC module. So name, last name, date of birth. Maybe you need to provide some type of tax document, that kind of things. It goes to WealthBlock, which is a KYC provider. When WealthBlock is able to determine your status, it will send a message to the administrator and tell him that, all right, this individual is entitled to buy the token, right? But before the investor is able to buy the token, he needs to create his on-chain identity, which is his wallet address. This is how he's going to interact with the security, with the tokenized security. So he created his wallet. We go with BitGo. So for those who are not familiar with BitGo, it's an MPC wallet. So it's a multi-party computation wallet. So it means that part of the private key is owned by the user. It's usually two. We call it shards. So two of the shard of the private key are owned by the user, and one is owned by BitGo. So when the user is created his wallet, he have his on-chain identity. What the investor is going to do is pretty much map the off-chain identity, so the KYC, and the wallet address. and whitelist that address for an amount of token, right? Let's say I'm investor A, I'm entitled to buy 5,000 units of this tokenized security, and then my address is going to be whitelist for that amount, pretty much. When this is done, I can buy the security. So I will interact with the smart contract that contains smart token. I'll buy the security. Let's say I buy 5,000, and then I will own this security. Later on, if I want to resell that security, what I will do is go to a DEX, so decentralized exchange, and exchange this token for another token, which is generally a stable coin. So again, like a tokenized asset that is backed by a proof of reserve, and usually it's a US dollar related product, so bonds, treasury, that kind of things. And that's pretty much it. I'm gonna be able like to exchange either my yield, so my rewards, or my tokens on the secondary market for US dollar, pretty much. So that is it for the presentation of the actual solution. The architecture might be a little bit complex, so I'm going to look at the chat, look at the question, and see if there is any interrogation.
All right, so maybe we can let me start from the end. Do tokenized deposit work the same way?
Yes and no. That's a really good question, because usually, I had a quick talk with Marstocard, and we talk about the same thing. So the thing with tokenized deposit, what is interesting for banks is that when you go to the bank, let's say I have $10, I put it to the bank, 9 of those $10, they're gonna get put into like different products, right? For my money to work, pretty much. And those banks, what they said is that we want to tokenize this deposit, right? So we want to tokenize those 9 out of $10 that are actually working. So the process is the same. The only thing is that because deposits are a living product, right? It's even more complex, because you need to be able to track what is happening with the deposit off chain and reflect this this reality on chain, right? So it's pretty much more complex, but it's the same process.
Okay, do you need a custody solution for real world assets?
Good question. So, no, as a user, I will say yes and no. So this solution right here is full self-custody for the investor, right? So it means that the actual investor owns the asset himself. And when we say own the asset, is that he owns the private key that give him access to the asset on the blockchain, right? For example, that is, yeah, my camera is still up. That is a ledger device, right? So it's a hardware wallet that pretty much have a private key in it, and this private key allow me to sign message to prove that I'm the actual owner of certain asset on the blockchain. So the asset itself, they live on the blockchain, but I prove my identity with this wallet. So it's up to you. Like you can do self-custody, like with this thing, or so this, or like a web-based wallet, or you can do what BitGo is proposing, which is MPC wallet. So you have, I think it's either the user have two, so they split the key in 3, right? They call it M and N. So you have 2 part of the key that is owned by BitGo and 1 by you. So like this, if you lose your key, you can still go to BitGo, and they will be able like to pretty much I believe, recover the fund. And yeah, so it's an in between with self-custody and but it's still self-custody. Like the solution provider do not own any part of the key.
Okay, Jean is asking, does Coreum has its own EVM?
So EVM stands for Ethereum Virtual Machine, and pretty much no, we don't. So the EVM, what it's happening is that it's pretty much transpile some code, right? So the code that is in the smart contract, so the smart contract itself that is written in Solidity, then it transpile it to binary code that is getting pushed to the blockchain. At Coreum, we choose a different route. So we still have a virtual machine, but it's not the Ethereum virtual machine. It's called Cosm Wasm. And what is interesting with that is that the smart contracts are written in Rust, and this virtual machine compile the code into WebAssembly, which is way more faster and also safer than Solidity, pretty much.
All right, Andres is asking, does it mean that you can tokenize any asset class, securities, art, wine, intellectual property, real estate, etc.?
Yes, exactly. So it's really up to you what you want to tokenize, right? At the end of the day, think about the blockchain as a medium, right? What you are actually tokenizing, it's pretty much up to you. So
All right,
we've seen like tokenization of securities, arts already, and real estate. I believe there is a couple of projects that are actively working on that.
you mentioned at some point compliance. So by compliance, do you mean KYC compliance or also compliance with other constraints like shareholders agreement?
I mean, so compliance in terms of, so KYC is one of the way to be compliant, right? You need to, depending of the jurisdiction and depending on the what rule you fall under, you want to make sure that your system is able like to enable that compliance on chain. So KYC, for example, is one of the things that the regulator will require from you. So how do you do KYC on chain? Like when you think about it, you cannot really do it. The way you do it is by whitelisting a certain address. And this is where smart tokens are really powerful, right? Because you're able to say that through the KYC process, I am identifying this accredited investor. And in the KYC itself, I'll take his wallet address, map it with his identity, and then on the blockchain, I will whitelist that address for a certain amount that this investor is entitled to. So pretty much that is how you enable like on-chain KYC. For the other constraint like shareholders agreements, I'm not really sure, honestly. How can you I'll have to look at what is the actual agreement, but I believe that it will be more complex than just whitelisting, but it's feasible through a smart contract, definitely.
Okay, because we're out of time, I wanted to ask you before I continue with the questions. Do you have a few more minutes to answer the rest of the questions?
Yeah, of course, of course. And I think
Okay.
I'll just go back to this slide. Like the presentation is finished, so
Mm.
question time pretty much.
Okay, so Nicholas is asking, how is price discovery conducted for tokenized assets when Coreum does not use oracles? Could you please elaborate on the price finding mechanism?
Yeah, that's a good question. So if you're not able like to query the price of an asset off chain, how can you pretty much not create the price, but make sure that an asset is sold at the right price? And this is something that took me some time to understand, but through automated market makers, what it's happening is that you have this curve, right? It's called a constant product. So you have usually it will be like A equal X times B or something like this, right? Then what you will do is that you will bootstrap this pool, so this automated market maker, which is really a software that is creating pool for a pair of two assets. So let's say you have your token and USDC. So your token and the US dollar, and you want to sell that token. Let's say this token need to be sold at like, I don't know, like $10, right? You're going to make sure that when you bootstrap the pool, you set up the right parameters, right? So the pool is balanced and that user can only buy the token for a certain amount of USDC. So they will provide asset B, which is the USDC, and in return, they will get the token. And the same thing, when they sell one token, they will receive the other asset, and the pool will balance itself. It can be complicated, but usually to make sure that the pool is balanced, this happens through arbitrage, right? So it's always good to have two pools, so two decks with the same assets. So like this, if the pool get unbalanced a little bit, that will create an arbitrage opportunity for someone, and then it will trade on that pool, and the pool will balance itself. So this is how you can be sure that uh, that yeah, the price of the asset is correct. I can share more documentation on automated market makers because it's a whole subject on itself, but it's super interesting.
All right. So basically, I'm reading the questions backwards. And now I'm at a question asking, William is asking, what insurance do you have in place for tokenization on blockchain?
What insurance in terms
Yeah.
of insuring the user fees? So that's actually a good question. I'm not really sure. Like I know that some of those company that build tokenization solution, they either have their in-house insurance, right? Or they work with company like I know there is an insurance broker that is called Superscript that work with a lot of Londons, and they pretty much specialize in Web3 risk. But it's not the blockchain itself do not have any type of insurance, right? You need to make sure that the solution provider that you're dealing with have this type of insurance, right? So you can be sure that interacting with the system, your funds are not at risk. And even if they are, right? Because there is no zero risk, right? Every investment comports some risk that you are pretty much covered.
And do you need a license for the assets tokenization gateway to go live?
The one that Sologenic is building. So quick disclaimer, Sologenic is the biggest DEX on the XRP ledger. And I'll put the link right here. It's a tokenization platform, tokenization engine. And this company, I believe, in order to be able to offer those tokenized stocks, they went to the process of acquiring a broker dealer license. So I put the link of sologenic.com. You can try the demo pretty much. It's very interesting how it works. You will see that the UI is super well made and everything. So that is on testnet. So it means that it's not live, but the live solution, as I think RTQ mentioned in the comments, is going to go live on Q3. So you're going to be able to pretty much buy stocks, tokenized stocks on the blockchain directly.
All right. And then we had a question already about how do you manage to bring assets on chain? And there was a follow-up question. Is this also possible for physical assets? How do you connect the token to the physical asset?
That's a good question. So for example, so for RWA, right? So let's say you have some, let's take, for example, like a USDC, right? So all of these stable coins, so USDC, USDT, so there is one that is operated by Circle, and there is another one that is operated by Tether. Let's go with Circle because what they do is they have what they call proof of reserve. So for every tokenized asset, they have, and it's available on their website, they have the proof that they have backing for that assets, right? Because we've seen that in the beginning of the presentation that the dollar itself, it's the token, right? So they make sure that is the asset, sorry, because it's not backed by gold anymore, but they make sure that they have a one-to-one, right? So in the case of gold, for example, there is the same thing for people that do tokenization of gold, and there is many, I believe. They have this proof of reserve. So it means that in a vault, they have hopefully 1 for 1, right? So if they tokenize 1 kilogram of gold, they have 1 kilogram in the vault. And usually they work with those big auditors, so PwC or Deloitte, that is going to go once in a while, make sure that the gold is actually here.
Okay, Carla is asking, which ERC standard do you use at Coreum for institutional grade real world asset tokenization?
That's a good question. So we do not use ERC 20, which is a Ethereum standard, but we use something that is native to the blockchain, right? So those smart tokens, they're native to the Coreum blockchain, but at the same time, they're compatible with this what we call, it's like a variant of ERC 20, which is compatible with ERC 20. It's CW 20, which is pretty much the same. It's just like a semantic change, to be very honest. But it's a customized solution that rely on a standard. So it's I believe the standard will be like pretty much CW 20, which is the equivalent um, of ERC 20 in the EVM world.
And a question again, maybe about what is Coreum? Does the Coreum network work on top of XRP, or is it a different unique layer one?
Good question. So Coreum it's its own layer one, right? So XRP Ledger, it's a different blockchain, so they have their own set of validators, and Coreum is completely separated. Like it's its own layer one, as Andres put it. So it means that it rely on its own set of validators to secure the network, pretty much.
And once an asset is tokenized, how do I use the asset to pay for goods and services?
That's a good question. So it depends, right? So in the case of if we go back to the shell example, right? Nobody pay with shells anymore, right? People pay with, I mean, there is no one that accepts shells, that not that I know, but like people pay with their US dollar, or like even like the commodities. I'm not even sure that people will, probably they will accept gold. Like if you go to a shop, you say, I'll pay you with some gold. They will take it. But usually what you do like with your asset that is tokenized, for a share, for example, you will need like to off ramp it, right? Or to either swap it for something that is actually accepted by the end marketplace. So if we take our example with the share of the uh, of the mall, you will first sell your share, right, for USDC, which is the stable coin I was talking about, and after that you will pretty much pay for your goods with USDC. And if you're really talking like to go like to from A to Z, like to the actual banknote, what you will do is off-ramp USDC. So it means that someone will take your USDC, which is a coin, right, and give you actual US dollar in your bank account. And after that, you will pay with with your credit card, for example, or go to the bank and take some cash.
All right. Are you looking for node operators or DON providers within the ecosystem to provide real world data to the smart contracts?
So node operators, not really. We have so Coreum is secured by a set of 62 validators. So the relayers, the validator set is complete, but we were actually working with some oracles to provide some real world data. But if you work with, I don't know, Chainlink or one of these big Oracle services, feel free to contact me. That is something we are looking for.
All right. Someone's asking, I think it's a question about for me, would more sessions on the topic be held in the future? I think there is a lot of interest on this topic by seeing this session today. So I guess we'll be holding more sessions about tokenization in the future. Yes.
Yeah, you let me know, Maria. It's my pleasure to come.
Yeah. Do you consider Coreum a real world asset token, or it's just infrastructure for capable real world asset tokens?
That's a good question. So the actual Coreum blockchain is the infrastructure layer, right? So it's what enable those solution provider to build on top of it, right? So it's not Coreum is not the actual tokenization platform, right? But it's the underlying infrastructure that enable those institutions to pretty much create those kind of solution. But that's a very good question, right? Because you have a lot of different blockchains, right? But when you're building solution, for example, that are like enterprise grade, when you need like to deal with user found, you need to deal with high throughput, you need to deal with interoperability, right? Because the more interoperability you have, the more liquidity you have, in a sense. You're able to tap into different ecosystem. You want to make sure that you choose the right infrastructure. And this is what is Coreum, and this is what we've built Coreum, is to provide the right underlying infrastructure.
Okay, there was a question. Can you please share a document that shows the difference with other layer ones? But someone from the crowd already did that for us. So thank you very much. um, all
Nice.
right. What regulatory framework does Koreum currently comply with? In which country is it compliant? What is the name of the regulator? Well, is Koreum currently undergoing sandbox testing?
So I'll start with the last one. So sandbox testing is a good question. So we have three, like a lot of blockchain, we have a devnet, a testnet, and a mainnet, right? So the testnet should replicate the mainnet fully, right? And this is how we conduct tests before they go live on the mainnet. In terms of earlier in the presentation, I talked about audits and the importance of making sure that everything is secure, right? We've been under a lot of audits by the top players in the game, so Certix, mainly, I believe Allborn as well. So this is how we're able to be confident that the chain is robust and that this underlying infrastructures is very robust. Another thing that is worth mentioning is that we're built on top of what we call the Cosmos SDK. So SDK stands for Software Development Kit. So it means that we didn't choose like to reinvent the wheel, right? We took something that is battle tested, which is this Cosmos SDK. So it comes with a different set of modules. So the more important one is the consensus mechanism that is called Tendermint. And this is all we were able to say, okay, this this common infrastructure, which is Cosmos SDK, is used by more than 100 chains. It has like more than, I believe, 2 billion of assets in the total value lock. And we're able to say, okay, we choose to build on something that has been battle tested, but on top of that, we did conduct some internal audits. What was the last part of the question? Sorry.
In which country is it compliant, and what regulatory framework does Coreum currently comply with?
Okay, good question. So Coreum itself does not need to be compliant, right? Because the tokenization provider need to be compliant. So in terms of if we take Sologenic, for example, which is going to build what they call the ATG, so the asset token gateway, which is a stock tokenization platform on Coreum. This company, to be able to provide the solution on Coreum, they acquire a broker license or any other type of license. I'm not sure exactly which one it is, but they had to be compliant with the entity where the company is based, right? Or at least where the product is going to be available for the end user. So Coreum itself do not need to be compliant in terms of regulation because it does not offer any type of end user product, if that makes sense.
Okay, and are real world assets currently live on Coreum? If so, can you name a few? And if not, what asset class are you expecting to onboard first?
Stocks. I believe stocks will be the first one to go live pretty soon.
Okay, I think we have no more questions, which is unbelievable. Okay, I'll just leave you guys maybe 30 seconds to write your questions if there are any other questions, but we're almost 20 minutes over time. So I want to thank to thank our speaker for taking so long for this presentation, but it was really amazing. Thank you for showcasing everything, explaining everything. Also, I think with very plastic examples, like very, very good examples that we can all understand. Um,
Yeah,
I see already
my
some
pleasure.
thanks.
Honestly, it was thank you for having me, Maria. Thank you, EkoLance. Yeah, I think it was, I mean, you guys let me know, but I think it was a good session. It's not an easy topic, so we did try to pretty much start from the basic, the beginning to the end, where I think it was more complex, but yeah, it's not an easy topic, but a very interesting one for sure.
Yeah,
So
great,
I
great.
did put my contact right here, L1@coreum.com. There is my mail, and at Helwan Mandé, I think this is my Twitter, but it's also my name on LinkedIn. So if you have any question or if you're looking to build on Coreum, feel free to contact me. I manage and we have a grant program, right? So what we do is provide financial support as well as technical expertise to those institutions that are looking to build on the chain, either like to develop a proof of concept or to start to build their business logic on Coreum. So yeah, feel free to drop me a message.
Perfect. And I also want to announce that everyone who participated tonight will receive an on-chain certificate for your participation, which will also prove that you were here tonight and will contribute to your on-chain reputation. You'll receive an email with the mint link. And
Nice.
yeah, we have a few other comments like, can you share a link to this comparison with the layer ones? If you have it quickly here and share it, be great. And yeah, the recording will be posted on our social media. So yeah, stay tuned with the EkoLance social media where we will post the recording probably next week.
Awesome. And yeah, I think I can share the slide as well if you want, Maria.
Yeah, of course. And we can share the slides to the emails who registered basically for tonight's session. And maybe to wrap it up, to like say goodbye, what's up for Coreum in the next quarter? That's the last question that I see here.
Oh, a lot of things. Thank you for asking that. So, a lot of things. So we just released our two-way bridge with the XRP ledger. So fully decentralized. Once again, you're able to pretty much tap and to send any asset from Coreum to the XRPL and the other way around as well. In terms of product, we have our let's say our DEX, native DEX that is coming. So it's going to be a super interesting approach. It's going to be an hybrid DEX. So it's going to be kind of like a order book, but at the same time, So it's going to be fully hybrid. And in terms of actuality, so we were in Paris for Paris Blockchain Week. The last week, we were also in Dubai the last week as well. I mean, Paris 2 weeks ago, Dubai last week. And next week, or in 2 weeks, we're going to Las Vegas for there is a XRPL event summit. So we want to be here to pretty much brainstorm with everyone on those subjects. And yeah, I believe other conference down the year, but that is pretty much the on-chain and off-chain
Activities.
activity. Exactly. Thank you.
Perfect. All right. So thanks again for participating, everyone, for taking the time. And I hope that you learned a lot. I did indeed. And I'll see you in the next event. Bye.
Awesome. Thank you, everyone. Bye-bye.
Bye.
Bye. Thank you.